I have to tell you all, when I heard about the theme for today, I was struck, primarily because as I thought about it, it really reminded me of my childhood. I guess it's because from a very early age, I had both faith and a dream. I had faith instilled in me through a praying grandmother and a praying mother. And that faith really allowed me to think and dream that I could rise above my circumstances. Like many of you, I'm sure, I didn't grow up in the very best environment. With a single mom and 3 brothers, life was not always easy. We grew up in a pretty rough part of town, and all around me, I saw examples of what I did not want to become. I just remember at only 8 years old, I found myself praying fervently, Lord, please allow me to make it out of my circumstances. I have to say, despite all of our economic challenges, we were rich in love and support. Surrounded by family and extended family, we spent much of our time languishing over big Southern meals, aptly prepared by the gifted hands of my grandmother. And we spent a lot of time learning and reading the Word of God, which became the foundation of my faith. I was truly blessed to graduate from high school with honors and college with a full academic scholarship. I even went on to graduate school and got my master's, was blessed to receive a fellowship in order to obtain my master's. I was living the dream, not bad for a girl from the hood, right? Amen. When I began, though, post-grad to start interviewing and consider what my options were, I was thinking about law and public sector, management, you name it. I really wasn't sure what was best for me, but what was in my spirit is I knew I wanted to be in a position where I could help others. And so I ultimately decided to join a relatively small yet strong firm called Texas Commerce Bank. And that bank eventually became the firm I work for today, JPMorgan Chase & Company. I've been there 22 years through many mergers and acquisitions, and I've just been so blessed to be able to help so many people. Over those past 22 years, nothing has brought me more satisfaction than knowing we help someone achieve their dream. And so, whether it was helping someone figure out how they were going to pay for college for their kids, or plan for retirement, or buy a home, there was just nothing like being able to use my God-given talents to help someone else. I also fell in love with the spirit of the entrepreneur. It takes so much courage, right, and fortitude every day, laying it all on the line to achieve that goal of being an entrepreneur. By helping business owners achieve their dreams, I, in fact, was achieving my dream. And how fitting, right, is it, that by faith, we're all able to achieve our dreams. I want to take the remaining time we have to talk a little bit about, I'm going to talk to my business owners and my budding business owners now, about some key principles that can really help you develop a firm foundation for your business. So I'm going to talk about a few concepts of affordable access to capital that should be a part of your foundation. But first, I want to be sure and urge you to reach out to your current bank, schedule some time with your bank, and make sure that you have a good relationship with a banker. that is a very important step in making sure that you've got a good foundation. I also have some bankers that will be around after to answer questions as well. Be sure and get a card from one of the bankers and make sure your questions are answered about your individual businesses. So, one of the most important aspects of having success in business as an entrepreneur is having affordable access to capital. We've studied many years over in what contributes to businesses, what helps businesses thrive. And the single most important factor is access to capital, access to affordable capital. The reason is access to capital, credit, is actually a tool for strengthening your business. And savvy business owners use credit as a tool to improve their cash flow, to grow their businesses, to expand. It's a tool. And knowing how to use that tool for your business is what will help strengthen your business and ultimately help you be successful. So I'm going to try to use this clicker here. Go back one. Make sure I'm looking at the right screen there. Yeah, I think we're in the right place. So as I said, it's really important to think about access to capital as a strategy for growing your business. And using credit really is a strategy, which means you have to use it in the way and the timing that really can help your business. All credit solutions are not created equal. There are specific credit solutions for specific needs within your business. And so today we're going to talk a little bit about those. We're also going to talk about what lenders look for. What are lenders, underwriters, what do they think about when they're making credit decisions? So we're going to look at initial credit considerations. We're also going to talk about the 3 C's of credit. Some of you may have heard of the 5 C's of credit. Raise your hand if you've heard of the 5 C's of credit. Yeah, my banker raises her hand. The 5 C's of credit are very important because it speaks to what most lenders are thinking about looking at when they make a credit decision. We're also going to talk about if you're going to use these tools, if you're going to obtain credit and be that smart, savvy business owner, you really have to understand the health of your business. You have to understand how your business is performing, what stage it's in, and the overall health of your business. We're going to talk about that today. We could be here for 2 hours talking about all the things that affect a credit decision, but I want to give you guys just some of the basics, some things that you can take back and chew on. Let's see here. Does that say business strategy? Okay, perfect. So as I said, one of the most important tools is access to affordable capital. And the reason for that is credit solutions are actually used as a tool for managing your cash flow. You talk to most bankers and they will tell you cash flow is king. We're a cash flow lender. In fact, I heard one funny comment at the conference I was at yesterday. My colleague said that his underwriters say, if the cash don't flow, the loan don't go. So, that's good, right? Cash flow is king. And cash flow management is the key to success with your business. Over 85% of businesses fail because of cash flow. Now, I didn't say they fail because they weren't profitable, right? I said they fail because they don't have good cash flow. So using credit to manage your cash flow is key. I also spoke a little bit earlier about the fact that all credit solutions, all tools are not created equal. So there are credit options that support a variety of very specific business needs. And so you want to make sure you match up your solution with your need. We'll talk a little bit about that. the difference between using a credit card, for example, versus a term loan, versus even a line of credit, right? And then credit, as I mentioned earlier, as a strategic lever that savvy business owners use to their advantage. We talked a little bit about that. So what do lenders think about before they even take a look at your financial statements, before they even look at your tax returns? What are they thinking about? You may be surprised that even before they take a look at how you're performing financially, there are things that they consider. Well, these factors are among those considerations, if you will, that are important. The economy. How is the current economy impacting your particular business? As the economy changes, better or worse, how does your business perform in that environment? Some businesses aren't altered by changes, the large changes in the economy. Others are more sensitive. Industry. What are the current trends in your particular industry? And how is your business faring along the lines of those trends? Are you with the trend? Are you doing better than the trends, worse than the trends? How is your business performing within your industry? Their standards, their benchmarks, how's your business performing? Who are your competitors? Who's doing the same thing you're doing? Who are your suppliers? Who are your customers? Operations. Over the last 12 months, what changes have taken place in your business? Have you changed your strategy? Were you business to business and now you're going to retail? Did ownership change? Did the person who owned the business for 20 years retire and now you've got a new person running the business? How have your operations changed? And that gets into ownership and management. And we're going to talk about the 3 C's here in a minute, but the character of the folks that own that business is critically important. Remember I talked earlier about your relationship with your banker. It matters because that's how your banker gets to know who you are, what's important to you, and therefore can be an advocate for you when you're looking at a credit solution. Ultimately, banks just want to get paid back, right? I mean, that's the whole point for them. Their business, they're in the business of lending money and then getting paid back and lending and getting paid back. So it's really important that they understand how will they get paid back. And then ultimately, again, back to character, why should we lend money to you? So I talked about the 3 C's of credit. And within those 3 C's are also the other 2, which are credit and capacity. But when you look at the first C, I just mentioned character, really looking at who are you doing business with, right? What's the history, not just of the business, but of the individual. If I'm talking with an individual that just got into the business, doesn't know much about the industry, I'm going to think differently about lending to that person versus maybe someone who just bought into the business, but they've been working with that business for over 25 years. In fact, they came up in that business. They were the operations manager for that business. I'm going to have much more of a comfort level that they can manage that business on an ongoing basis versus potentially someone who just got into that particular business. The management expertise, again, goes to experience. Personal credit history. A lot of folks are surprised that personal credit history matters. They want you to just sort of look at the business, the credit of the business itself. Well, with a small business, you are the business, right? So your ability to pay your bills on time, to not bite off more than you can chew, to be able to handle things, sustain over a period of time, ultimately, that's how you're going to run the business credit as well. So that personal credit history is really important. And then there's your business score. There is actually a score that's assigned specifically to your business name. So that's all a part of character. Cash flow, again, I talk about how cash flow is king. And ultimately, really what we want to know is, does the business have enough money coming in on an annual basis to pay back the loan? We want to look at that on an annual basis, and then we want to look at it on a current basis, because that's going to tell us if you can handle the amount that you're requesting. And then finally, collateral. Remember, I talked about all a bank wants to do is get paid back. So they have to have a first way to get paid back, and that is the cash flow. That's everything going either according to how it's already going or how you predict it to go, right? So looking at your ability to pay back based on your current business plan. But then they have to have a second way out. What if things fall apart? What if things change? How does the bank get paid back? That's the second way out, and that's where collateral becomes important. So all of those are factors that banks look at when they're looking into making a decision on credit. And again, I mentioned that cash flow is king. I just want to reinforce, and this little graphic I think does a nice job of this. Look at all the things that are affected by cash flow. You don't really think about it, but ultimately cash flow, whether you're a small business or a large business, affects your ability to pay rent, right? Can you staff? Can you buy inventory? Can you market if your business needs marketing? How do you price? Cash flow affects everything. And that's why it's king. It allows business owners to settle your debts on time, which then allows suppliers to offer you credit, allows landlords to rent you space, and ultimately, it can be the factor of whether you can pay your employees or not. So when you're talking to a financial institution about your cash flow, that's why it's so important. And again, just going to noting that most businesses fail not because they lack a profit. It's because they haven't quite figured out how to get the cash flow where it needs to be. And so you're like, wow, you just talked a lot about this cash flow. I mean, how am I supposed to know how all that works? How can I figure that out? I didn't necessarily get in business to be like this person who's great in accounting, right? There are definitely tools. There are ways for you to understand how your business is performing and what state your business is in. And that goes to knowing the health of your business. Now, again, I would strongly recommend that you meet with your banker, because if you are a small business or you're just getting started, you may not have the tools, you may not have the resources to hire a CPA right away. There are so many resources out there that can help businesses, small businesses and startup businesses, evaluate their financial health. There are nonprofit organizations that banks like Chase partner with every day to ensure that there is someone there to help you understand how your business is performing. They help you with creating business plans. They will help you analyze the quality of your financial statements. If you have a bookkeeper and you've got someone taking care of your books, they'll help you take a look at that and analyze the quality. But there are so many resources out there that are of no cost to you. And I would just encourage you to meet with your banker. And again, some folks will be around after the meeting to talk with you. As a large financial institution, we partner with those groups because they help us get business clients ready. If they're not quite ready for conventional financing with a bank, they help us get them ready. There are other tools out there that allow them to help get businesses ready to be bankable. And we not only partner with them, we fund them as well. So I have the privilege of launching African American Loan Fund this year in partnership with the Valley Economic Development Center. JP Morgan Chase put in $3 million to seed the fund and another $5 million of investment money so that they could lend $30 million to African American business owners in Chicago, Los Angeles, and New York. And so we are committed to the entire life cycle of businesses. And whether we are directly involved in lending to them or whether we partner with someone to get them ready for conventional lending, we're committed to business owners. And so it's incumbent upon you to learn about those resources. I mentioned a little bit earlier that all credit solutions are not created equal. And this is just categorically a snapshot of different lending products that are used for different purposes. So you can see there at the top, business lines of credit. Typically, you use these to access funds to take advantage of trade discounts, to build inventory. It's a way of using funds right away to get access to something that is either going to help you expand the business or grow the business, and you need to be able to take advantage of it immediately. Now, you notice that it's stated there that this is a revolving line of credit. That means that it does have to get paid off and then used again and paid off and used again. That's the concept. And if it doesn't revolve, then chances are it may have been used for the wrong purposes. It may have actually been better that you use term debt. Term debt is when you take a significant purchase and then you pay that back over a longer period of time. And so some examples of that may be real estate or a large piece of equipment or a big investment of working capital. You need to hire a few people, do some marketing, and buy some inventory because you're expanding. So those are examples of what you use a business term loan for. And then finally, a credit card. And I think credit card is probably one of the most abused tools out there because people use it for literally everything. But really, a credit card is intended to be used for very short-term financing. It's for things that you would seek to pay off in 30 to 60 days. There will be times when you need a little bit longer to pay things off, but a credit card is really designed more for short-term financing. There's one other area that I want to make sure I cover with you all, and I talked earlier about our partnership with other groups. Make sure I got the right screen up. Yeah, it's SBA financing. So, how many of you have heard of the SBA? SBA finance, good, good. So, as some of you know, the SBA is a government administration whose mission it is to help business owners thrive, grow, and they come alongside financial institutions, banks, to ensure that there is that capital is made available to business owners who may not qualify for traditional financing yet. And I say yet because many times a customer may start off in a small business or an SBA product and ultimately end up in a conventional banking product. But it's the SBA's primary goal to help qualified small businesses obtain financing when they may not be eligible for business loans through normal lending channels. And they do this by guaranteeing part of the lender's loan, which enables banks to take that calculated risk. And typically what you find, and the reason I share this with you is when you meet with your bank and you're interested in obtaining access to capital credit, they may recommend a small business administration or an SBA solution, and it's typically for these reasons. It could be that the business is highly leveraged, maybe short on collateral. You may not have been in business for 24 months. Typically, conventional financing is, bank financing is for businesses that are 3 years or older. Or there are other identified weaknesses that don't allow for conventional financing. But the benefits are you get longer maturities on your loans, which may help with that cash flow we talked about earlier. There's a lower equity injection, so you may have to come to the table with less than you would in traditional financing. Typically, traditional financing requires 20% or more. With SBA loans, you can come in at 10% or less. Sometimes 100% financing is available. They're typically easier to qualify for, and proceeds, once again, can be used for a variety of needs, and your banker can help you identify those. But I wanted to be sure and point that particular tool out to you so that you're aware that that's also a solution. So in addition to organizations, like I mentioned earlier, Valley Economic Development Center, SCORE, Opportunity Fund, there are several community organizations whose mission it is to help small businesses grow. You also have SBA that helps businesses grow as well, and we partner with them on a daily basis. I'll just conclude by saying that businesses who seek out affordable access to capital and have good, strong relationships with their bank, with someone that can provide accounting services and with legal services, create a firm foundation that they can build a business on over time. And, I consider it a blessing to be able to be in this industry and help people achieve their dreams. I believe in the small business owner, for after all, they lay it on the line every day. And as a result of their efforts, jobs are created, people's lives are sustained, our communities recover. And so I would encourage you, whether you're in a business today or it's your dream to own a business, fulfill your dreams. God bless you guys.